Hi, welcome to Trader Stock Special Edition. And this is actually coming on live from Japan. All right. So today we are a bit late for the show, but it's okay because we can actually do the show anytime, right? And glad to be here. And today is a very green day. Is it a green day today? For the market because CPI was just released earlier, an hour earlier. Yeah, I think an hour earlier. And what did the CPI actually say? Let's see. SPX. Okay. All right. Let me just do this. CPI. CPI actually came out as expected. Uh, and it's 6%. Basically, it is actually lower than what we had last round, right? Lower than what we had last round. Last round was actually 6.3, right? Let me see, something wrong here. Okay. Yep. Okay, I think the market is actually up plus 63 points. In fact, futures are even up much higher. Earlier, as I saw, was actually up. Futures was actually up about 200 over points. Yeah, plus 209 points. Futures. Yeah. So and of course, once the CPI actually came out, the the market actually came down first. Yeah, once the CPI was released, we had a very huge candle down. And if you have just saw what I've actually posted on Facebook, right, you can actually see that immediately it took out all the stop loss, all everybody, right, all did. And then subsequent to that, what has happened is that it went up, whipsawed a bit up and down. And of course, after that, it continued to actually go up right until now. Yeah, right until now. And yeah, and then when it actually hit this level of 12, about 12,000, two 280, yeah, about that level, then it actually was hovering around. Something wrong. I think my chart is hanged. Let me see where's M and Q right now. Okay. Oh, it actually went up even higher to above 12,003. So I was actually looking at the wrong chart because my chart is hanged. Yeah. So it's now about 12,003. It's up about 260 points. Yeah. So I mean a bit of salvation because in the last weeks, right, we had actually very red and painful days. Yeah, red and painful days up till now. Of course, we are actually making some form of recovery. Yeah, because there has been bank runs. Yeah, not very often we actually hear about this, but we had actually three bank runs. Yeah, three bank runs. Uh, First started with Silvergate, which is a crypto bank, and then after that, it went on to this Silicon Valley Bank, right? Silicon Valley Bank, and after Silicon Valley Bank, it is signature bank. So coincidentally, all starting with S. Yeah, and and after the Fed has actually built them out last last Sunday. Last Sunday, yesterday it was actually still coming down, but today all the bank stocks has actually uh, went up. Yeah, if you can see, Goldman Sachs is actually up about -3, yeah, but it actually gapped down and then is actually green, yeah, it's actually up today, and then all the BAC should also be up today, green, right? Not really, yeah, but it came down lower and then it is actually now somewhere here. Okay, FXI, which is the bank ETF, should also be green, yeah, green. Okay, yeah. So for the past few days, it has actually dropped by more than about $5. Yeah, $5 out of $32 is actually quite huge. And of course, the other side of the market, which is the crypto market, right? Crypto market uh, today is also quite a huge jump for crypto. Okay, if you cannot keep your money safe safe in the bank, right? Okay, probably crypto might even be safer, right? Yeah, they would not be any bank runs on crypto unless you are actually keeping crypto in the exchange and the exchange goes bust. Yeah, then that's it. Yep. Bitcoin today had actually gone up by 17%. 17% just today, and of course this is from, yeah, just today itself, one day it went up by 17% on Bitcoin. Okay, yep. So let's get back to our charts. The SPX. Okay, what level are we at now, right? Okay, and of course last week the market had a huge sell off, big red candle, big red candle. Yeah, practically the whole of last week we were actually down. Yesterday we were actually okay. Yeah, yesterday you can actually see that we had a slight bounce back up, and of course today the market continued to actually recover up. Yeah, so yeah, okay, yeah. So basically here, I mean, if not because of the bank issues, right? If not because of the bank issues, I don't think that the market will actually fall off so steep. And of course, it can actually be what is that? Um, a benefit for the market, right? Because of the Fed increasing interest rate from 0% environment and now up to 4% close, coming to 5, now up to about 4.75, right, or 5%. Yeah, so now from 0 to a 5% level, right? And of course this has actually caused the banks, which was actually the collapse for this silver, not Silvergate, the Silicon Valley Bank, right, was because they had actually taken the deposits from these VCs and all these tech companies, right? And then they went to actually buy bonds. Yeah, they went to actually buy bonds, because long-term bonds, because at that time the rates was actually 0%, right? And of course, when they actually wanted to get some returns, they went to actually buy long-term bonds. And when the interest rate continued to actually go up, right, what happened to the bond prices was these bond prices actually came down. Yeah, so bond price has inverse relation with interest rate, and if interest rate goes up, bond prices comes down. Yeah, so they were actually suffering from this, and they had liquidity issues, and because of that they had to sell off their bonds. They had to actually raise money, and when they couldn't raise money, they had to actually sell off some of the bonds to actually pay for people who wanted to withdraw money. And when they couldn't do that, that's when the thing blew up. Yeah, so the market is of course saying that now the Fed has actually bailed them out, right? Probably they know that being too aggressive to the rate hikes can have very huge repercussions, and of course this is one of the repercussions which is companies failing, companies failing, and of course this company which actually failed is actually the bank, whether it is because of some stupid move the bank has actually done to actually get buy bonds, right? Is a separate matter. I mean, the fact is that it has companies has actually failed, and if this actually continue, probably more companies will fail. Yep, and hopefully with these kind of things, they would actually step less on the pedal on the rate hike, and the next one, which is actually coming next week, right, 22nd, might be slower, a bit slower. Yeah, not 50. Now it's actually coming back. Expectation is coming back to 25 basis points. Okay, let's see. Yep. Okay, so this is where we are right here, and of course, I would say we can actually recover back up to this level 4,000 level is actually the next target to come up. Yeah, next target to come up in the next days or weeks, provided there's actually no more big issues on the fourth or fifth bank coming off. This is Nasdaq. Nasdaq also had huge recoveries. Yeah, and some of the component stocks, right? Some of the stocks which had actually big runs in the last days, right? Yeah, despite despite these bank issues, right? Yeah, uh, I think Microsoft actually had a huge run uh, in yesterday and itself today itself also, yeah, today itself also, and I think this is probably some news which they actually released related to some AI stuff yesterday. Yeah. So of course, AI is still the talk of the town, right? And of course, any companies that can have a benefit or have products related to AI would actually be the darlings right now. Yeah. This is AI, C3 AI. Yeah, C3 AI. Yesterday itself also had a huge run up. Yeah, after the decline right here. Okay, so this again another stock. I mean, it can be a bit speculative, but we can actually see that at these three levels, it is actually having also a strong support. Yeah, strong support. I think this is actually at about $20.50. Yeah, $20.50. A strong support, and of course, if you actually want to trade this, yeah, stay small. Yeah, this is again quite I would say a speculative stock, and it came all the way up from $10, right? $10 in to now $22, right? In just less than 3 months. Less than 3 months. Yeah. Okay, and other stocks, Apple is also quite strong, right? Apple. Where's Apple? Amazon is up today. I think everything is up, lah. I mean, because all of it had a big sell off in the last weeks, right? Apple, few stocks. Okay. Chinese stocks have not fared well. I mean, Chinese stocks has not fared well in the last days. Mainly, I think after the CCP came out with the expected GDP growth, right? I think it's about 5%, 5%, which is actually uh, uh, lower than expected. Yeah, lower than expected, and they had not had such kind prior to the prior to the pandemic. Okay. Yeah, you see all actually green today. Okay. This Facebook has also been quite strong today, gapping up how much? $8 plus $8, yeah, plus $8. Okay. But watch out for these levels around here, yeah. Watch out for these levels. It may get rejected at these levels here. The next one is actually here, about 19193. Yep. Goldman Sachs up 10. JP Morgan, Citibank. Yeah. This is actually CI healthcare stocks are hit quite bad. UNH. Now, tonight we are not going to actually do anything heavy because uh, we are just trying to hang loose at the hotel room, and I'm also in my sleeping clothes. Hope you don't mind. Yeah. Okay. Yeah. Okay, so I mean, one thing good about trading and knowing how to actually trade is that you can actually do it anywhere you want. I mean, whether you are uh, at home, whether you are at a holiday, you know, it's also possible for you to actually do it. I mean, as and when you like, you say. I mean, if you want to trade, you can actually trade. And of course, one thing which I like is that if I trade today, right? If I trade today, and if I can generate some profits, then tomorrow my shopping is actually free. Yeah. Uh, and that's something which is quite nice feeling, quite nice feeling. Okay. All right. PLTR XPR. Okay. One thing, I think one of the positions which we did last week on XOP. Okay, XOP. Okay, XOP. I think we did an iron condor, right? We did an iron condor, and of course, in the last week, the XOP has actually dropped from 139 to 128, 139 to 128. Yep. So it's actually a huge drop. It is still not in the money on our short strike. I think our short strike is at 120, 120. And let's see. Let's see. Let me see. The position. Okay, XOP. Okay, XOP. If you have done this trade, right? This is actually XOP, right? Yesterday itself, I think XOP was actually in a loss. XOP was actually in a loss. Yeah. So because in wait, you can't see my screen, right? Let me put back to the right screen. Remove this screen. Share, present, share screen. Okay, you can see now. Okay, so you can see XOP, right? Okay, so what happened is that we did an iron condor on SOP, and as I said, XOP price has actually dropped down by quite a lot, right? Quite a lot, yeah. And then let me do this. Okay, so Iron Condor, and because XOP has actually dropped till yesterday, the position was actually in a went from a profit to a loss, from a profit to a loss, and of course, today itself, SOP has actually bounced back $4, yeah, $4, and again the position went back into profit of I am doing two lots, right? So if you have done it, probably your profit would actually be around $10, $10. And SOP price is 128 today. So our strike price is 121 152 121 152. Yeah. Let's see, SP, no, trade. Okay, 121 152. Let's go to the chart to see XOP. Where are we in terms of the prices? XOP. XOP. Sorry, the internet here is actually quite bad, right? So 121 152 121 152 121. Wait, 121 152 121 152, right? So 121 and 152. Yep. So I'm just taking the short strike, the short strike, 121 152. And this is the minute one. So let's do the day one. Okay, 121 152. This is 121 121. Okay. Okay, remember when we actually entered this, right? I think we actually entered it somewhere when it was actually in the middle, somewhere here. I think we entered it when it was in the middle. So because of the price drop, right? The trade on the bottom side, which is on the put, the bull put spread, right, was actually tested, and of course, until yesterday, right, we had actually incurred loss on the lower side, which is the bear bull put spread there, and of course on this side, we actually had a gain, but the losses were actually more. Yeah, so total position we were actually in a loss, but of course today the price has actually recovered, and the position went back to profits. Yeah. So one thing which we like Iron Condor so much is that sometimes uh, when the profit sorry when the price actually move up and down, right, move up and down, it is okay. I mean, you don't have to actually how to say panic, right? You don't have to actually panic uh, because that the price is actually starting to go in the money on one side, yeah, on one side. And recall when we even did our trade, right, we also went in to actually say that are there supports, yeah, are there supports at the levels where we actually place our short strike, are there supports, yeah. And of course for this, yeah, there is 1 2 3, and of course once it went below, right, when the market actually recovered, we actually quickly go back up above the support level, above the support level, yeah. And of course, I would say sometimes this kind of price movement is actually even better for the trade, even better for the trade, because once it actually starts to get oversold, because you have a timeline, right, you have a timeline where you're actually in a trade, yeah, you have a timeline. For example, 45 days, yeah, example 45 days. So within these 45 days, right, our target is what? Our target is that the price, right, actually ends up in the middle, in between the short strikes, right, in between the short strikes. So if very early on the trade, right, very early on the trade, the price actually gets tested, the price actually gets tested. When I say tested, means that the short strike actually gets breached. The short strike actually get breached, which is this, yeah. So this is the level. So we almost got breached this level, and we are only about less than 2 weeks, right? I think less than 2 weeks. I think about 2 weeks in the trade. We're actually 2 weeks in the trade, 14 days. Yeah, 14 days. And I think the trade was 52 days, if not mistaken, when we actually entered the trade. So the trade was actually 52 days. So we are only 14 days into the trade, and it starts to actually get tested at the earlier part. So we have a lot of time here, a lot of time at the back, yeah, for the price to actually recover, for the price to actually recover, yeah, and when the price recover, right, by the time the price actually recovers maybe to somewhere here, right, then this time lapse would actually be more, right, be more. And of course, when the time lapse more, that's where your theta decay would actually be a lot, yeah. And the other side of it is that when it gets tested one side, and if it holds on support, then the price actually goes back up. Sorry, when it goes tested here, then of course this side, on the top side, you don't have to actually worry, because the price from here to here is actually very far. Yeah, it's actually very far. So even if it actually goes up all the way, yeah, even before it touches the top, the by the time the trade would actually be already expired or close to expiry. Yeah, so that is one thing which is actually good if the price gets tested quickly within the early part of the trade. Yeah, so that's why price movements like this I would actually love more, yeah, rather than when you're actually in a trade of 45 days, right? Yeah, and you were always in a profit because the price don't move. It was always somewhere in the middle, and suddenly after let's say after 30 days, right, when you actually see a lot of profits after 30 days, right, and suddenly the price actually starts to move either side, whether coming down or going up, and of course that's the time, yeah, where you actually see your profits gets wiped out very fast, yeah, very fast, yeah. So understanding the price action when it should actually move, which is actually to your advantage, is also good. Yeah, also good. Okay. So yeah, so this trade is okay. Is back to profits, and of course we did not do any other trades, right? Yeah, we did not do any other trades besides this. Yeah, together, I mean, as we have actually done it together. The other all stocks has actually sold off in the last few days. Yeah, and of course, all of it has actually went back up. Yeah. Gold. We also did a gold trade yesterday. Yeah, gold actually did not move anywhere today. Did not move anywhere today. Okay, so what we did again, one thing which maybe we could also cover is gold trade, GLD, GLD. Okay, gold. If you can, we actually did a strangle yesterday. I mean, it's more advanced. I don't advise you guys to do, but I just wanted to uh, share with you guys this concept of IV. IV. So if you look at gold, what happened was that yesterday itself, gold was actually here, right? It was actually at 177.96. Okay, and today we are actually expecting to have the CPI release, and CPI release can be considered as a binary event, because we do not know whether after the release what will it what will it be, and of course how it will actually affect stock prices, in particular here gold price. Okay, so it can be increasing the gold price, it can actually decrease the gold price. So before that actually happens, right, yesterday's IV rank for gold was actually 55 when I actually did the trade. uh gold, right? Gold, yeah, you can actually see here, right? No, you can't see. Let me I shared the wrong screen, too many screens around. Can you see or not? No. Okay, yeah, let me see. Stop sharing. I'm actually sharing the wrong screen to you guys. Let me share again. Share, share screen. This one. Okay. Go. Okay, go. Okay, so I was actually talking about gold, right? Gold price yesterday was 17 177, yeah, and of course today is 177.9. Today is 177. Okay, practically gold price did not move from yesterday. Okay, but one thing which I wanted to show you is this. Can you see my screen now? Okay, so one thing I wanted to show you is that we did a trade yesterday, right, on gold, which is a strangle. A strangle is basically selling a short call and selling a short put. Okay, and what we did was at 190 and 168. So within this price, right, 190 is actually somewhere here, 190, 190, okay, and then 168, 1688, sorry, 168 here, and then 190, 190 is here, 190. Okay, so we saw why is it not okay? So we saw a put, at 168. We saw a call at 190. Okay, so these prices are actually very far, and I do not expect gold price to actually shoot up because of this CPI, right? Shoot up to 190. Nor do I expect it suddenly to drop down to 168 just because of the CPI. Yeah, so I did a trade, which is actually a strangle, selling a call and selling a put. Okay, and when I actually did trade, right, the IV rank, yeah, is actually 55. It's actually 55 yesterday. Okay, and today itself it is actually 35. So practically price did not change, but if you look at the trade, right, the trade is actually in profit of $51. $51, yeah. And why is it actually in profit of $51? Is because the IV has actually dropped. The IV, or the IV rank, has actually dropped from 55 to 35, and price no change. Yeah, so that has actually caused the trade to be in profits, and that's where we can actually take it out today. Yeah, take it out today to lock in the $50 profits, $50 profit. And we did the trade. When we did the trade, we actually took $180 of credits, right? Let's edit the order, put it down 1 cent, 1 more cent. $50. Is it done? This is my shopping budget. This is my shopping budget tomorrow, right? I can actually buy something with this not done. Put it another dollar down. Okay, then I think it should be done. I need to refresh it because this thing is a bit cranky. Another dollar down. 126. $54 profit. Is it done? Still not done. So you guys get the idea, right? I mean, sometimes we don't need price to actually move, yet positions we can actually still make profit. Yeah, and this is actually by just change in what we call IV crush. Yeah, IV crush. It's the same thing which we actually do if we are actually doing earnings. Yeah, you can also use the same concept to actually trade earnings, because pre-earnings the IV of this would actually be high, and then post earnings the IV would actually drop. Yep. So even if price did not move, right, uh, you can actually still make profit in the trades. Yeah. All right. Okay. Yep. So if you have any questions, you can actually post it in, and other than that, I think we are going to sleep soon. Okay. Okay. All right. So the market is still on the uptrend today. I expect probably in the next days it would actually continue to actually go up. Hopefully, some of your positions, long-term positions, would have actually some recoveries. And of course, for those people who have actually added in positions when the market is actually down, right? Then of course you would actually be in profits right now, yeah, on your positions. Okay, so like I said, I think I also covered this in the this thing in the newsletter, right? Newsletter. I covered this in the newsletter this week. What did I cover? Yeah, I actually talk about having shorter trades, right? I actually talk about having shorter trades, and yeah, because of the market volatility nowadays, I do more day trades, because if holding on to doing swing trades, sometimes it's actually a bit difficult, because the too many things happening in a week time. Yeah, today J Power is talking, tomorrow you might have CPI, the next day you have all this rate hikes and all. So it might be difficult for your positions to actually continue to uh, uh, continue to stay in profits if it is actually in profits. Yeah, and of course, not all people can actually also day trade because of the account size restriction. Because if your account size is 25,000 and below, right? Yeah, 25,000 and below, then you cannot day trade more than 3 times within a 5 days rolling period. Yep. What that means is that within a 5 days rolling period, you cannot buy and sell more than 3 times. Yeah, on the same day. Yeah, today you buy and sell, tomorrow you buy and sell, the third day you buy and sell. Then you actually have to wait another 5 days, counting from the first trade, to do another day trade. Yeah, if you do it before that 5 days expire, right, and you don't have this uh, uh, three free day trade limits on your account, then they will actually flag you as a day trader. Okay, and what happens when you are flagged as a day trader? You cannot open any more positions. Okay, so be a bit careful, because um, when you can't open positions means that you cannot do adjustments. You cannot do adjustments, yeah. Uh, until you cannot open new positions until you increase your account to above 25,000. If you don't have the money to increase the account to above 25,000, right, then of course you cannot open up any new positions until these things these these what is that, these trades gets back into the limits of three trades in every 5 day rolling. Yeah, but of course, if you have a account more than 25,000 and you do intend to day trade, then of course this PDT rule may not be so relevant to you. Yeah. Okay, and the other thing which also I say that if you intend to day trade, but you don't have limits, right? You don't have limits on the on no more strikes lah. The three you have actually fully utilized. What you can actually do is that don't close the position. Let's say you trade on Apple, and that Apple trade you are actually profitable. Okay, so you bought a call, you are in profit, but you cannot close the trade on that day, because you just put in the trade on that day. If you close it, then of course that will count as your maybe your fourth day trade, and then you will get flagged as a day trader. So instead of closing that trade, what you can actually do is you buy a put. Yeah, you buy a put. Yeah, so when you actually buy a put, means that you basically lock in the profit. If the price goes up, then of course the call will make money, right? But the on the put will actually lose money, so it will actually balance up. So basically, more or less, your profits, right, would actually be locked at the position when you actually entered into that put opposite trade lah, to actually lock in the profits. Then on the next day, right, you close both of the trade together. So if you actually do that, you won't do that buy and sell on the same day. Instead, both of the trade you actually buy yesterday, and then you close the next day. So that won't be actually counted as a day trade, but you are how to say, you are actually mirroring the effect of a day trade lah, because indirectly you have already closed your position on at the time where you actually put in the opposing trade. So this is one trick which you can actually do if you want to day trade, but you don't have the bullet to day trade anymore. Yeah, and of course we also covered here the VIX winner lah. Yeah, remember last week we talked about doing the VIX spread again, and of course because of the bank issue, right? The VIX actually spiked again from the 18 level, and of course we took out the position when the spike came when the spike came, we took out the position to have another winner. So this kind of trades are rinse and repeat kind of trades where you should actually put in your arsenal, because at the end of the day a lot of these are actually very high probability trades which can actually generate you I would say more or less free money free money. Yep. Okay. All right. So I think that's all I actually wanted to cover today from the land of the rising sun. I was it's actually about 12 a.m. here. Yeah, because it actually 12:15. Yeah, I mean the Japan time is actually 1 hour advanced faster than than Malaysia. So I actually got to wake up early tomorrow. So I will actually see you guys back in KL next week, and hopefully we will actually continue to have a good market for the rest of the week. Okay, so happy trading. Stay safe and have a good week. Bye bye.